Hello traders, you're welcome to today's video. You're welcome to my channel. Okay, today we're going to be talking about divergence. Guys, this is a video long awaited. I promised you guys I was gonna do this video. Here is a video. I fulfilled my promise. Okay, so if today is your first time you're watching my video on this particular topic, how to trade divergence, all right, do well to subscribe below this video. Hit that subscribe button so that the next time I talk on any other topic, you're gonna be the first to get the video. All right, I have so many topics to cover, so many topics. In fact, I have not even started. Okay, when it comes to forex, I have so many topics to teach about, and you can't get these videos if you don't subscribe. So pause this video and hit that subscribe button so that the next time I'm gonna publish a video on any other topic related to forex, you're gonna be the first to get it. Okay, now also do well to like the video, like my video, comment below, and then share it. Okay, so guys, without wasting much of our time, and before I get started, guys, I would like to say this is a disclaimer. Whatever I'm telling you today is not an advice for you to take or risk your money in the market. Okay, the financial market is so risky, so you can take away whatever amount of money you think you have within the twinkle of an eye if not properly done. Okay, so be very conscious when trading the forex market. Whatever action you take after watching this video is solely dependent on you. Okay, I'm only sharing what has happened in the past and believed to be working in the market, not a future, not sharing what will happen in the future. Okay, so that's one thing in the forex market, you don't know what's going to happen in the future. Okay, so let's get started, guys. What's divergence, guys? Divergence is a conflict. Okay, it's a conflict that occurs between the price and the oscillator. All right, between the price and the oscillator, guys. At the end of this video, you should be able to know what divergence is all about. Okay, you should be able to know what divergence is all about, the best time to take your entry after spotting the signal. All right, how to set your stop loss, the 3 ways to set your profit target. Guys, I have 3 solid ways I use to take my profits. Okay, now what to do the moment price come back against your entry. All right, any trade that comes threatening your entry point is dangerous. So I'm going to be sharing you guys what exactly you need to do the moment price comes back to your entry point. Okay, so without further ado, let's get started. Alright guys, you can't trade divergence like this. You can't trade divergence like this. This is just a plain chart. Alright, we are not talking about price movement right now, how the chart is being formed and the rest is shaped. Today we're going to be talking about divergence. Alright, so all you need to trade the divergence successfully is an oscillator. Right, so what we're going to do right now is to insert our oscillator. We're going to use a stochastic, okay, with the settings 1433. Now you say okay. I'm going to edit this a little because it seems it has some the colors here should be red. Just play around the colors, okay, red and green. Red and green. You can leave the rest things to be like that. Okay, don't you think the lines are too thick? Let's adjust it a little bit. Okay, we have this. Okay, yep, so we believe this is okay. So guys, the first we're gonna look at is what is divergence. All right, we're not going to be talking much about what divergence is all about, okay, because I wouldn't want to take much of our time. So you do me a favor by reading the basics of what divergence is all about. Okay, what we're going to focus mainly on is how to take the best time to take your entry, because that's where so many traders miss it. All right, so many traders miss it. They don't know when exactly to enter the market, so they later end up getting stopped, and at the end of the day market respecting their signal. So today I'm going to be teaching you guys how to do that, take successful entries. Okay, but first let me just throw a little light on what divergence is all about. Divergence is a conflict that occurs between the price and oscillator. Alright, now we generally know that oscillators are meant to follow prices up and down. Oscillators are generally meant to follow prices what up and down, guys, but at a point in time we witness a sudden change, a sudden difference in the market, okay, between the oscillator and the price. For example, we have something like this. Price did something like this, gave us what, a high here, isn't that, and gave us a low. But what happened? It gave us what, a high that was higher than the previous. Alright, a high that was what, higher than the previous high. But if you check likes for likes on the oscillator, it's different. Now this high is lower than this, but on the oscillator, what happened? This same high that was higher than this on the chart was lower than this on the this one on the chart was what, lower than, was higher than this one on the oscillator. So we have something like this, price giving us what, higher highs, alright, oscillator giving us what, lower highs. So that is the difference we're talking about, guys. Why is this thing happening? Why is it happening? Because one, this guys, the oscillator is meant to do exactly what the price is doing, but why is something like this happening? Why are they doing different things? That is what we call divergence. All right, that's what we call divergence in the forex market. So let's get another example. All right, now see what was happening here. Price was giving us what, another higher highs. Oscillator was giving us what, lower highs, lower highs. Okay, see another example. Price was giving us what, higher lows. Oscillator was giving us what, lower lows. You see that, guys? You see that? So this is what we call divergence in the forex market. All right, so now we're gonna enter quickly how to trade divergence, guys. How to trade divergence. How to trade divergence. This is very simple, guys. This is very simple. At any point in time you open your chart any day to trade, the first thing the metaphor trader does is to take you to where, the current, what's happening currently, the current price. All right, the metaphor trader will do or take you to the current price. So what you do is, if you're looking for divergence signals, what you do is you just compare highs and lows on the price and oscillator. Now you look backward to see the exact place or exact place where the oscillator, the exact highs or lows where the oscillator and the price did something different. All right, so looking at this chart from this present price, okay, I know I don't have a connection now, but looking at what's happening here from this present price, guys, you see that we have no divergence here. All right, we have no divergence here because here we have equal highs somewhere here, kind of equal highs, but on this later we had something else. All right, we had something else. Now, guys, so many people make mistakes of doing something like this, of drawing something like this. Yeah, something like this, and want to call it a divergence. This is not a divergence. Whatever highs or lows you're connecting, guys, it must not pass through a candle, neither will it pass through what, the oscillator lines. All right, don't do something like this and call it a divergence, guys. Don't. So whatever swing highs or lows you're connecting, it must not do what, the line must not do what, pass through the candles or the oscillator line. Now you're gonna do something like this. If there's no divergence, there's no divergence. You can't force it out. Okay, so now you do something like this. This is a divergence. Why? Because it's not passing through any line. You're just connecting the previous high on the oscillator, and you're connecting the previous highs on the chart, not the line, without the line passing through any of the candles or the line. All right, So that is it. So we're gonna move straight toward the second thing, the best time to take your entries. The best time to take your entries, guys. The best time to take your entries. This is where most traders miss it. This is where most traders miss it. All right, they've gotten a divergence signal. Yes, a very perfect one. But most traders end up getting too early into the market, and most traders end up getting too late into the market. So in this video, I'm going to share with you guys the best time to take your entry. Alright, I'm gonna be showing you with some proofs the best time to take your entries. Once again, guys, if you're finding this video interesting, just pause it a little bit and hit that subscribe button. Alright, hit that subscribe button and make sure you subscribe to my channel, like the video. So let's get back to business. Let's see where we can get the divergence signal. Alright, let's see where we can get the signal. But for this is a cat JPY, the 15-minute time frame. Let's go back to 1 hour time frame. Alright, this is the 1 hour time frame, guys. This is the 1 hour time frame. So what we're gonna do now is look for divergence signals, so that we can get our perfect entry. Can teach you guys and show you guys where to take your perfect entries. Now here we have a signal here. We have a signal here. We have a signal here. Price doing what? Giving us what? Higher low, higher highs, higher highs. Alright, higher highs, and oscillator giving us what? Oscillator giving us what? Lower highs. Okay, so you see the divergence here, a very perfect one in that matter. Very perfect divergence. So now you've gotten this, guys. You've gotten this. Where is the exact time I should enter this market? One we ask, when is the exact time I should enter this market? Now we are generally taught that we should join the trend, isn't that? Checking from the previous, this is an uptrend. All right, this is an uptrend. So we are generally taught to do what? Be joining the trend, that the trend is our friend. Okay, now one thing with divergence is that it reveals what the market makers are doing. Some of you may ask, who are the market makers? The market makers are big banks. I don't know, this might be the first time you're hearing this. The forex market is not free, it is being manipulated. Okay, so in order to avoid these guys, you must do what? Trade along with them, because when you as retail traders, you cannot beat them. Their sole aim is to make us lose money in the market. So the only way they can make us lose money in the market is by giving us so many fake moves. You okay? If they're giving us so many fake moves, so that at the end of the day we're gonna be freaked out, and then they will now reverse the normal direction and hit our stop losses. Now I'm going to be showing you what I mean by that. Now you see that the market established an uptrend, giving us high, low, abi. Alright, now giving us another high, which was higher than this, gave us a low higher than this. Now gave us another high. Alright, another high, and did and dropped. Now why are these guys pushing up this way? Now ordinarily we are taught that when price if you want to join the trend like this, when price comes back to break the previous high is where you enter, isn't that? Yes, that's what we are taught. If price come back to break the previous high, for those who want to join the trend, that is the only time you do you take your trade. Some of you might say you should take the trade at the edge, immediately it breaks out. Some of them will say you should wait for a retest. Okay, but whatever the case may be, so many people took this trade as a buy trade because it broke this previous high. It broke this previous high. Okay, it broke this previous high. This is a previous high, so it's so much enough. Even see what happened again, guys. See what happened here. It broke with this candle. It broke with this candle, and the next candle came and did formed a hammer on top of that level. So very, very strong signal, very strong confirmation for everyone to buy this trade. All right, very strong confirmation for everyone to do to buy this trade. And even at the point, the next candle came up and still what was still buying. This week you saw price got here at a point, but later dropped down to form the shooting star. Okay, all right. But for those of you who are divergence traders, those of you who trade divergence as our main strategy, we were not moved by this breakout because what? Looking at our oscillator, it wasn't giving us the same thing. It was not giving us what the same thing. So now they broke this level, but oscillator was still recording something else. Oscillator was recording that the market is supposed to fall by giving us what? Lower highs. All right, but the chart is doing what? Giving us higher highs. You see where the manipulation now comes in. The oscillator now has revealed what the market makers are not doing here. So that is the thing. That's one thing you should know. The forex market is usually manipulated. But now the question is, if you don't have oscillator, if you don't trade oscillator, how do you know about this fake out? You won't. That's why they say 90-something% traders lose in the forex market, because so many people trade blindly. Do you understand me? So many people do what? They trade blindly. Because apart from the market maker strategy and the divergence and few other strategies, it's difficult to get a strategy that can reveal exactly what the market makers are doing. Now in this scenario, you see what happened here. The oscillator now has revealed what the market makers are doing. Because even while they broke this high, so many traders were buying. But oscillator was saying, hey, this market is pushing up, it's time very soon to drop. So as divergent trader, we waited for this price that was going up, this faking that was going up, to do what? To finish, so that we can do what? Take it as what? A sell. Now as a divergent trader, you are only supposed to do what? To follow the oscillator. As divergent traders, don't follow the price. Okay, don't follow what this chart is telling you, because you're gonna be faked out. Why am I saying this? Because the market makers are only powerful enough to manipulate the chart. Right, to manipulate the chart, that's the only thing they can do. They cannot manipulate the oscillator. So as divergent traders, we don't follow what? The price, even though we're going to be faked out. We only follow the direction of what? The oscillator. Now the price was going higher and higher, but what was happening here? Oscillator was doing what? Falling lower and lower. So this is the guy we are waiting for to follow. Now how do we follow it? By waiting for this price to come back and do what? Start falling as the oscillator is doing what? Falling. I hope you're getting me, guys. We are not following the chart because we're going to be faked out. Even when the chart was going higher and higher, oscillator was doing what? Going lower and lower. So we waited for price to come back and follow what the oscillator was doing. In this case, see what happened. Now price came back after faking. So many people came back and pushed and broke this level with a powerful engulfing candle, which is bearish. Now see your perfect entry, guys. Here is where your perfect entry is. The moment you spot a divergence, it's so simple, guys. It's nothing complicated. The moment you spot your divergence, all right, the moment you spot the divergence, wait for price, wherever price is going to, in this scenario, to come back and break the previous high or low on the price or on this oscillator. Do you understand me? Where do you take your perfect entry? The moment price comes back to break your previous high or low on the oscillator. Now while there was a previous high in this or divergence, see your previous high here. All right, this was a previous high. All right, so we are now waiting for price to do what? Come back and break this previous high and close below it. So what do? We place our horizontal line at that level, focusing at where that level. Now see what happened here now, guys. They knew that they want to continue downward. So see what I did. Then I brought up what? This powerful bearish engulfing candle. One, they are bringing up these candles. Two things are involved. One of them is they don't want those of us waiting to follow them to trade downward to do what? Follow them. Because when they are breaking with this candle now, so many of us we don't want to follow what? This, because of the distance between our entry and the stop loss. All right, this is 34 pip stop loss. Most of us won't take this trade as a sell, but it's the correct trade, but we're not going to take it because the distance between the entry and the stop loss is too much. In as much as no signal, no strategy is good enough to tell you where exactly the market will get, we are not certain that price, after setting a stop loss of what? 38 pips, price will move ×2 of what you're setting as stop loss. Do you understand me? So that is the reason why most of us won't take this trade, and that's the reason why they are pushing all the way down. Now the second reason why they're pushing all the way down like this is because they don't want you who have taken this trade as a buy to run away from this market easily. All right, they don't want you who have taken this trade as this signal as a buy to do what? To run away from this market what? Easily. Now see what happened here. If you took this trade as a buy, all right, from this level to anywhere, I don't know. Now see what happened. Nobody, believe me, that no trader will set his or her stop loss below this level. All right, where will their stop losses be? Most of us will set our stop loss just below this swing low, all right, the recent swing low candle, or just a little bit distance. But look what happened there. No matter where you kept your stop loss, price still came down and hit you because you were already manipulated, you were already wrong. Okay, you were already wrong. Nobody wants to put his or her stop loss here. No trader does that. Nobody does that. All right, so good traders who thought they took a good entry on this trade would have kept their stop loss there somewhere here, or a little bit somewhere here, or then just somewhere below the second support level. Because if price comes in and breaks this support level, they're expecting it to come and break here, so they will want to keep it below somewhere this support level, all right, this second support level. But anyway, you kept your stop loss. See what happened in the market. Price went all the way down. So because you were faked out, all right, you were faked out. So what am I saying? In essence, the perfect time to enter a market is when price have come back to break your previous high or low, all right, from the two connected swings. Now in this case, it was a bearish divergence where price was giving us higher highs, oscillator was giving us lower highs, indicating that this market will do what? Will sell. Indicating that this market will do what? Will sell. So it's a bearish what? Divergence. So at that point, we waited for price to come back and break the previous level. So now see what happened. Price broke this previous level. Now for those of you who have good money in your account, this is a perfect entry point, all right, with a stop loss somewhere here at the previous swing high. You're not here to gamble, just be a little bit above your swing high, all right, and see what happened. You got all the money all the way down here. Okay, don't worry guys, I'm going to teach you guys, I'm going to show you guys why the price came all the way down here and how you would have captured all this move. Okay, now let's get another example guys. All right, okay, good. Price was doing what? Giving us low base. Now it gave us what? A divergence here. Price giving us what? Higher lower lows. Oscillator giving us what? Higher what? Lows. See a good divergence? See the perfect divergence guys. See the perfect divergence. So what, like I said earlier, what is our perfect time for this entry? Now where is our previous swing high or low here? In this case we are connecting the previous swing low, isn't it? Yeah, the two swing lows. Now where is our previous swing low here? Is where? At this point. At where? This point. So this is a point we are expecting market after going down to come back and do what? Break and close what? Above. So look at what happened here. We place our line. Now don't forget that at a point the market was somewhere here, all right. So they broke this level for so many traders to take this trade as sell. Now we already knew, because as divergent trader, the oscillator was not recording the same thing, and we already know that we are not supposed to follow what? The chart. So we are following what? The oscillator, and the oscillator was rising while the price was falling. We are now get that yes, these people have stepped into the market, they have now started manipulating this market. So we waited for them to do whatever they are doing by doing what? Waiting for price, whatever price is going to come back and break and close above this level. All right, now see what happened. Boom, price broke all the way from this level. Now the same scenario I explained here, why they broke this place, this level, this previous level, all right, with a powerful and bearish engulfing candle. It's the same thing now occurred here. Now they are breaking this place with a powerful bullish engulfing candle. Why is it that two things are involved? Because the people who took this trade as a sell will not be able to run away from this trade. All right, they won't be able to run away from this trade. Okay, and secondly, you and I who are waiting to follow them to enter and buy this trade, we can't do what? Follow them. Now see what happened here. See the price close. So many of us won't take this trade. Why? because the distance between our entry and a stop loss is way too much. 40 pips, guys. 40 pips. Are you certain that the market is going to move 80 pips to give you 1:20? We are not. Alright, but so many of you who have so much money in your account, you could have taken this trade and did what? Expected such amount of money. Alright, because if you lose this kind of trade, your account will still be okay, but many people who don't have enough money in their account can't take this trade. It just has to do with your rules, your trading rules, your risk management. Okay, if you're comfortable taking this kind of trade, fine, but I'm just going to give you an example. It doesn't mean that all entries are like this. No, there are some that can give you a perfect entry, as in a perfect setup, without you having to risk so much money. Alright, now we got this trade and we bought this trade. You see that the price came back and broke and closed above the previous level, which is what is previous swing low. Now we have another example here. We saw price going up, while on the oscillator it was doing what? Falling. You see that? Now the same thing. Where is our previous high? This time we are connecting a two swing highs and we are expecting the price to sell. Now, simple explanation, guys. Each time you're connecting the swing highs or swing lows, for example, you're connecting the swing highs, you're not expecting price to break this. Get it straight. Once you're connecting the swing highs, you're expecting the market to fall, because what these lines you're using to connect, it now serves as what? Resistance. So you're expecting the market to hit those lines and come back down. Right? Once if you're spotting a bullish divergence by connecting two swing lows, now the line you used to connect the two swing lows now serves as what? The support, whereby you're not anticipating that the market will buy, because it will fail, or it probably will not break what? This support level, which is this line you're using to connect them. Right? So that is it. In this time, see another example where we connected these two swing lows. You see why I tell you that there's so many good opportunities, even though you're missing the likes of opportunities like this and this. Now see another opportunity to sell this trade. So this happened to be a bearish divergence. Now where's our previous swing high? Because we are connecting the swing high. This is it. So we're now expecting market to do what? Come back and close where below this previous high. And see what happened. The market closed with this what? With this candle, with this particular candle here. Alright, with this particular candle. So many of us, multiple of us will take this trade as what? A sell, because what? We have the distance between the entry and the stop loss is just 16 pips or 15 pips or 17 pips. Alright, and we are certain the market will move 30 pips or so. Okay, so that's just the difference between this one and this one. Okay, now let's get another example straight. I hope you're getting what I'm teaching you guys. I hope you're getting it. Do not forget to like and comment, and then subscribe to my channel. Okay, now let's get another example. This is CAD JPY. Okay, let's go to another currency pair. AUD card. Do we have any good setup? Any good setup? Yeah, we have here market giving us higher highs. Okay, oscillator giving us what? Lower highs. So here is it, guys. This is another perfect example of what divergence is all about. Alright, now see what happened here. Market gave us a high, low, another what? High, breaking the previous high. But comparing likes for likes on the oscillator, it wasn't like that. At a point, this high and this high, they started doing something differently. Alright, so at that point, the same example, what are we expecting? Price to come back and break what? Previous what? High. So where was the breakout candle? This one. Alright, this was the breakout candle, guys. So we are taking our trade from this level. If your account is enough to take such a trade, you're taking it from that level with a stop loss here. Alright, the target 1:2 at least. Okay, alright. So that's another example, guys. That's another example. So I know the good thing about divergence is that it happens in all the pairs and in almost every day. So if you don't get a signal today, or if you miss the signal today, it doesn't mean you won't get a signal tomorrow. Now see another scenario here. The same thing, example like above. Now this time around, you see that the price came back and closed what below this price, but it was what still bearish, bullish. It's the same scenario here. So what if instead of waiting to do what, take your trade, or because from this bearish candle here, you do what, take your trade from this level, guys, from this level, because you see that the price broke, closed below this what previous high, but it was still what, bullish. It was still what, bullish. That's a very good time to enter your market. It's the same scenario, it's the same thing. Okay, it's the same thing. You don't have to do it bearish or bullish. In as far as price closed below the previous level, once you spotted the divergence, take your trade. Like what happened here, guys. If you waited to take this trade all the way down here, see what happened. Your risk was too much, way too much. All right, your risk was way too much. Now, but if you took this trade immediately, this price broke this level, see what happened. From here, you're having a risk here. All right, and you're certain the market will give you times 2 of that. So it's the same scenario. What you do is just wait for price to do, just wait for the difference to occur between price and oscillator in the market anytime you're seeing it. Okay, wait for price to an oscillator to do something differently, and after you've spotted that, you just wait for price to come back and break the previous high or low. Not only breaking, close above it. All right, now see another example, guys. Here price was falling, oscillator was doing what, was rising, guys. All right, so the same scenario here. We waited for price to do or break this previous level, and now where was the previous level that broke? This candle didn't break, the other second one didn't break. Now see the real candle that broke after this combination 1 2 3 can give us what, a morning star. So see the engulfing candle that used to break this level. So at that point you took your trade at this level. All right, you took your what, your trade at this level, guys. You took your trade at this level, and see what you got. From how much risks? Just little. All right, just little risks, kind of 20 pips to have what, 100 and something pips, guys. So you see how perfect the divergence can be. And one of the good things about divergence is that the risk to reward ratio is always very high. I'm going to teach you guys how to maximize your profit. Alright, I'm going to teach you guys how to do what, maximize your profit. So I believe you understand this to this point, okay? Because right now we're diving into the next topic, which is what, how to set your stop loss. Every trader, beginner or what, you should know how to set your stop loss. But in case you don't know, what I do is, what I teach my student is, you set your stop loss at the highest, at the highest high or low, the highest high or the lowest low of the day. All right, for example, guys, for example, if you are taking this trade as a sell from here, okay, from here, where would our stop loss be, guys? Where is the highest point of the day? Where's the highest point of the day, guys? Here, because we are taking what is sell trade, so the highest point of the day is what, here. Now if you are taking a buy trade, you kind of this trade, you are taking this trade as a buy, okay? So where's the lowest point of the day? Here. The lowest point of this day is what, somewhere here. So set your stop loss for a buy trade below the lowest point of that present day, and set your stop loss for a sell trade above the highest point still of that same day. So I believe you understand what I'm saying, okay? Secondly, it has to do with your risk management, okay? It has to do with your risk management, guys. So, but I believe you understand what I'm saying right now, because we're going to dive into the next what thing, which is what, the 3 ways to set your profit target. The 3 ways to do what, set your profit target. Now without wasting much of our time, guys, let me show you. Now one of the ways is what every other trader uses, by taking your target, setting your target at the what, the next support and resistance level. Support and resistance level. Okay, support and resistance what level, guys. So the newbie who is able to spot the support and resistance level, bravo, because you're in knowing how to trade. Okay, so this is the normal conventional way so many people use it, setting their stop as take profit at what the next support or resistance level. For a sell trade, setting their stop loss at what the next support, and for a buy trade, setting their stop loss at what the next resistance. So I'm going to show you guys the two ways I develop myself, and this is called what trading with the oscillator. I call it what trading with the oscillator. Now for example, guys, we took this trade as what a sell. Okay, we took this trade as what a sell. We saw the divergence to sell, and we took it what as a sell by doing what entering here, by entering here. Now guys, we are entering here without any target, isn't that? What we've done, what make sure we set our what stop loss. All right, see our entry, see our stop loss, see an open target. Now I call it trading with oscillator because I'm setting this thing open because I don't know how far this oscillator will trade. All right, I don't know how far this what oscillator will trade. Okay, so see what I do. I will trade with the oscillator. I will sell this market until this oscillator gets into the oversold area as for a sell trade. Okay, the lines must cross each other and what leave the oversold zone, giving us what a buy signal. So in this scenario, see what happened here. Do you understand, guys? After selling this trade with an open target, see what I do. I will sell this trade I will sell this trade all the way down here, following the oscillator, okay, to the oversold zone. Now I will only leave this trade if the oscillator crosses each other, okay, and comes back and break this line, what 20, this level 20 you're seeing, this level 20 you're seeing. Okay, so price must come back and break this and close above here. That is only when I will leave this trade. In that case, let's trace a candle that broke that line. Okay, so now this was a candle, guys. Following this oscillator strategy, this wasn't a much trade, a huge trade. Okay, this wasn't a huge trade, but at least it was a profitable one. Now let's check another example so that we should explain better to you guys how this works. All right, now we have this divergence. We have what this divergence. Okay, now we took our entry the moment price did what close below here. All right, which is what from this candle, just from this candle. Now we had what an open target, but we did what had what a stop loss sets. No trader should forget setting stop loss. You can play around your take profit, but don't ever play around your stop loss. Your trade, for every trade you take, must have a stop loss. All right, be disciplined enough to have stop losses on your trade. So now we have an open target. Now the next thing we do is what to follow this oscillator, sell it all the way down to what the oversold area for a sell trade. Now these two lines must cross each other. This green and the red line must cross each other, leaving what this zone, this line 20 zone. Now that is only when we will leave this market. All right, so now let's trace that candle, the candle that broke that line. Boom. Boom, 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 boom. Okay, now here is it. This is a candle, this is a engulfing candle. All right, so now we took this trade all the way what down here, because this was the area we left our market. Okay, this was the area we left what our market, and it was still a good trade because we did what we had stop loss of how many pips, 12 pips, 14 pips to get what 70 something pips in the market. So it's a very good trade. Okay, so now I'm gonna give you, now see what happened here, guys. Failure to leave this trade after oscillator broke this level. After oscillator came back and broke this level, see what happened, close above this level, see what happened. The market went all the way back up against you. Failure to close this trade the moment oscillator broke this level from the 1 hour. The market came back all the way up against you, and not only against you, it hits your stop loss, and from a trade you've already earned 70 pips, you're now going negative and you eventually were stopped. So it's simple. Each time you sell a trade or you buy a trade, for a sell trade is what I'm giving you here, sell with the oscillator until it gets to the oversold zone, go into the oversold zone, crosses each other, comes back and break this line, only then should you close if you're following this method to take your profit. Okay, now let me give you another example for a buy trade. For a buy trade, let's look for a buy trade, guys. A buy trade, we have this lower low and what, higher low. So we took our entry just at the close of what, this, at the close of what, this guy, this bearish guy, this bearish pin bar. Okay, now our target is what, remember it is open, but we had what, our stop loss sets. Don't forget, don't always forget, just few 1 or 2 or 3 pips below your entry. Okay, below the pin, below the lowest point of the day. You're not there to gamble. Okay, now what did we do? We bought this trade with the oscillator. Now we are buying this trade until oscillator went up, broke this line. Now this time around, the thing went up, crossed, came back and bounced on that line. It didn't break and still did what, went up again. All right, went up again, but this time broke here from here. So now let's trace that candle. Okay, here was a candle. So we took this trade all the way what, up here. All right, and this was still very good because what, we took our entry here. How many pips? 20 pips, and we got 1:2 what, 1:2 risk to reward. So it's very simple, guys. This is one of the methods, the second method I used to take my profit, trading with what, the oscillator, and it gives me so much money. All right, so much money anytime I'm right. Now let me show you the third way to take your profit, guys. The third way to take your profit, this one makes use of moving averages. So we're gonna insert some moving averages. All right, trend oscillators, some moving averages with the settings. What, one of them is 50 exponential open, and then you say okay. Okay, now we go back and apply another oscillator, trend moving average. Now this time you're not having 50 but 200. Okay, now just play around the colors by changing it with something else, the same thing. Okay, now inside another oscillator, which is what, trend moving average. This time not 200 but what, 800. Now play around the colors, change it to something what else, and you see what, okay. Okay, now this method, let's say each time you're trading in the direction of any moving average, guys, use that moving average next to your entry as your take profit. What I repeat, each time you're trading in the direction of the moving average of any moving average, use the next moving average there as your what, take profit. Now what do I mean? Now let's say I took this trade somewhere here, and the next moving average is what, the 50. Forget what happened here, you're seeing it because it has happened, because in the normal, the price has been on top of this moving average, telling us what, it's an uptrend. So we are taking this trade only on the way down to this moving average, because that is the what, the next moving average next to your entry. All right, now we had another one, here, another one here, we had another one here. We are taking this trade somewhere here all the way down to the moving average, which is 50. See the divergence signal here. We had another divergence signal here, so we took this trade all the way what, down here to the 50. Okay, so that is it, guys. That is it. Now only extend your profit if you want, if price successfully does what, break that moving average. Now if it successfully does break that moving average, set your target again to the next moving average. Now if it successfully breaks that one, now set another target again on the what, next, which is the 800 this time, but still that the price did not get there. Price only stopped on the 200 and then went back up. So you took your profit at this level. All right, at this level. So that's the 3 ways I used to take my profit. Okay, I use 3 ways to take my profit. I'm going to be sharing you guys one other ways, but that will be on my next video. Okay, that will be on my next video and not on this one. Already we are running out of time, so I believe you understand what I am teaching, what I've said so far. If you still find it difficult to spot or trade divergence successfully, guys. The simpler thing I will do for you is to just join my group on Telegram. It's called Power of Divergence. I'm going to add it to the description below. Okay, join the group so that you learn so much. The group is just designed for educational purposes. We don't give signals in the group, neither will we pay any money, okay, to anybody. You just come, learn, and improve your trading skills. I also read the book on this strategy, Power of Divergence. Okay, but this particular one is sold for $15. So if you want to get it and you feel this strategy is so good enough for you to use, and you still have difficulties in trading it, in using it, it's either you're getting my book or you're joining my group and to join other traders who are experienced in this strategy to trade. Okay, to trade.